Hi guys, welcome to Money Trap video series. The money trap or investing mistake that I'm going to talk about in this video is how speculating and short-term investment mindset keeps you poor. As per this article from Forbes, the success rate for day traders is estimated to be around only 10%. So 90% are losing money. Corey Michael at Vantage Point Trading is even more pessimistic, or you can say realistic, when he says only 1% of day traders really make money. I think now you know why it's an investing mistake for most of the beginners and for even experienced investors. I have divided this video into three major sections. First is what is the money trap, second how to know we are in this money trap, and finally how we can avoid this money trap. I will also share a template of questions that I use when I do the company's research before I pick a stock. Also, I will share with you how I do the market research, and finally the websites and sources I use to gather information about a company before I decide to invest in it. So this video also covers briefly how I pick stocks. However, I will cover this topic in another video in detail with example. So let's start. When you start investing, getting distracted by short-term returns is very common. I did this mistake too and lost money in the long run. Of course, I had some good days and bad days, but overall, I was in loss. I not only lost money, but also lost time, which I can never recover. And in investing, the more time you have, better it is. Here, I would like to show you my mistakes and how I realized that speculation or day trading is not for me. I started with a very small amount. One thing that I did good. I knew I know nothing about stock investment and was too lazy to learn first, so I said to myself, let's start with small amount and learn on the way. Here you can see I made like 30% profit in 1 month, which made me overconfident, and I lost 50% the very next day. Then I continued trading, and after 1.5 years I was able to recover what I lost, and I realized this is something which is not for me. On the other hand, here how long-term investment mindset changed my portfolio. You see the green dots on the chart, these are the filled orders. If you will observe, I bought consistently irrespective of it going down or up and haven't sold it yet. If I would have tried to time the market, my position would not be 64% up today. I still hold it and will keep investing consistently for at least 5 years. So in short, invest in good companies you believe in consistently and do not touch it for at least 5 years. And the longer you can hold the stocks, better it is. I know it's easier said than done. I've been through it. You need to be patient and have self-control. So how to know that you are a victim of this money trap and are wasting your time speculating stock market? Well, if you are buying a stock or investing just because your friend or someone on social media said this stock is going to the moon, if you haven't done your research before picking a stock, if you know nothing about how to do a research to pick a stock, if you have no idea on how to decide whether a company is a good investment or not, if you want to buy today and sell it when the stock is 10% up, well, if answer to any one of these questions is yes, then you have fallen into this money trap and are making a most common investment mistake. There might be few geniuses out there who are doing day trading and competing with bots, and maybe they manage to make profit. But trust me, they have studied and worked really hard to reach that level. And believe me, it's not easy and is not for everyone. Niall Fuller at learntotradethemarket.com quips, the reality of a day trader is a guy who got 2 hours of sleep last night because he was trying to trade the overnight session. Now he is up at 6 a.m. trying to day trade the next session. Many traders get sucked into trying to become a rich day trader largely because that's what they think is socially acceptable or cool. On the contrary, long-term investment is the way to go for most of the people like us who have a full-time job and invest part-time. So the ones who stick to the idea of long-term investing have always made a profit, which one can also confirm by looking at the historical data. Here is a table by Paul Merriman which shows the performance of different investment products over a span of 9 decades, from 1930 to 2019. Here you can see that the stock market is unpredictable in shorter term. However, over the longer term periods encompassing 2 or more decades, the relative returns of the stock market is more predictable. Simply investing $100 in S&P 500 would have been grown 3 times to 350 in 10 years. If we look over the time period of 20 years, it's still the same, which includes the 2008 market crash. And if we go check over the time period of 30 years, it would have been 17 times of your initial investment, which is 1727. So invest consistently for long term to get better returns. Please note, in this video I am only talking about the mindset of an investor who is investing in stocks. I am not talking about the portfolio of an investor, which is a completely different topic. I will discuss about different portfolios and styles with you in my coming videos. Well, now we know how to find out whether we are speculating or not. Let's check how we can avoid this money trap. First of all, never pick a stock by just watching a YouTube video like this or by reading an article or news. Always ask yourself why you need to invest your hard-earned money in this company. Think of it like some stranger came to you and asked you to lend him some money. Will you just lend him your money without asking him anything? I bet not. You will try to find out why he wants that money. Who is this guy? What's in it for me? What's his idea? What about his team? Are there others doing the same thing? What makes him different? Is he legitimate or a scammer? Well, the questions and background check that you will do in order to convince yourself to give that person your hard-earned money, same checks you have to perform against the company you want to invest in. Here is a very basic template you can use to pick stocks. So there are basically two types of analysis, qualitative and quantitative. Under qualitative, you can see what the company does, its products, its competitors, market size, market growth rate, company's current position in the market, customer reviews, CEO reviews and its management, recent news about this company. Just Google buy, the name of the company and stock, and similarly Google sell, the company name and the stock, and read both positive and negative arguments. On the other hand, in the quantitative analysis, check the balance sheet of the company. Check its long-term and short-term debt, its cash flow, assets versus liabilities. Is company growing over time or is stagnant or is shrinking? Well, these are the minimum questions you should Google before you pick a stock to avoid this investment mistake. Warren Buffett famously said, buy into a company because you want to own it, not because you want the stock to go up. Now you know what things to ask or for which questions you have to find answers to avoid this money trap. But where to find the answers which you can trust? I mean, if another stranger comes to you and says, hey, this guy is awesome, you can trust him, invest your money, will you be convinced? No. You want the confirmation from a trustworthy source. Similarly, while looking for information about a company, you have to check trustworthy sources and not some random tweet or YouTube video before you pick a stock. First source of information is the company's website itself. Every publicly traded company has an investor section where they upload their quarterly reports and share news that is interesting for investors. Read those reports and news. All publicly traded companies have to release a quarterly and annual report as per law. These reports are audited and have to be accurate, and any inaccuracy or false information to mislead investors can lead to criminal charges. So the source of this information you can trust. Of course, there are still scams and scandals inside companies, but that's just unfortunate and also illegal. Other sources where you can find this information is on the websites like Yahoo Finance, Finviz, or if your broker provides data about companies, check that data. Next, look for news about this company. Do other news channels also covering the information shared by the company? How other authors perceive that same information? If the company under study have mentioned about their customer's name, check their customer's website and their investor section. Do their customers mention anything about them? Check out companies' competitors and their website. Explore companies' LinkedIn account. Read blogs or forums or Reddits. Read what companies' employees or customers have to say about them. Do their customers or employees also think that it's a company that produces great product or provides great services? Once you have done all this independent research, then watch or read analysis of other investors on YouTube or wherever you want, and always take the arguments of others by pinch of salt. And never ever second guess your own research. Purpose of watching or reading others' analysis is to get a different perspective. Different people digest same information differently, and the goal here is to make sure that you haven't missed any scenario during your research. Well, these are the sources and steps I take while studying a company. In order to understand more, you also have to learn how to read a balance sheet. What different terms in a balance sheet means. For this, there are a lot of good tutorials online. Read or watch any of them. There is no one article or video that explains it all, so you have to start with beginners articles and from there you can go in depth. Once you are done with the study of the company, next you have to study the market which that company is addressing before you pick that stock. There are many companies that do market research and make their reports available for free to the public. So just Google the word market research and then the name of the market you are looking for. You will find many different websites and reports, so try to read as many of them as possible. Different reports might have different estimates and forecasts, however, they will have a lot in common also. So for example, you have read 3 reports from 3 different sources and all say that the market of a particular product is growing. However, the growth rate mentioned by them is different. Then the conclusion we can conclude from it is that the market is growing at least. The growth rate we cannot estimate accurately, no one can. However, we have an idea or an approximate range. These reports give you a holistic view of the market and factors that might affect the growth of the market in future, which makes it easier as an investor for you to pick a stock in that market. Please note, no one can predict the future, nor the companies creating these reports. So keep an open mind and always question the analysis. The more you will read, the better decision you can make. At the end of the day, all the information is available out there at everyone's disposal. So take your time and read it. Do not think that it will take a month to read all the information and by that time the train has left the station. Trust me, the train will always be there waiting for you, but after reading all the information you can decide whether to board it or not. And please do not think in a way that you have invested so much time in researching a stock, so now you have to find reasons to buy it. If after investing so much time you think this company is not a good buy, then leave it. But believe me, after reading so much and doing so much research, if you are not satisfied with the company you were researching for, you may find some other company which you find better. So after doing all that study about the company and the market, if you pick that stock as you think it's a good company and worth investing, invest in this company and let that company use your money to innovate and grow. It's similar to if you give your money to a stranger because you believe in him or his idea and you think he can go big. You won't lend him money today and take it back tomorrow. Just because someone else is more interested in that person's idea and has offered you a little higher price to buy you out. Instead, you will feel more confident about your decision and will stick with him for a long haul. And by long haul or long term, I mean at least 5 years. And the longer it is, better it is. So next time when you are speculating or picking a stock, just imagine that company as a stranger asking you to lend him money. If you are thinking to sell, just imagine why you should take your money back from that stranger in whom you believe so strongly. This analogy will make sure that you do not fall into this money trap or do this investing mistake.